Hello there, folks, and welcome back once again to Southbank Live. This is episode 40 now. We actually have two episodes of Southbank Live this week, first of which today is here with Sam Volkering. Now, over the past few episodes of Southbank Live, we have been dwelling a lot on the geopolitical regime at the minute, on lots of politics and commodities and things like that. But we have not been paying too much attention to what's going on in the crypto space. So I thought it'd be a good time for us to have a chat with our resident crypto expert, Sam Volkering. Sam, how are you getting on this evening?
Good evening. Not too bad for a Monday. It's quite a nice evening where I am. So, pretty happy. Nice to join you on Southbank Live again.
Yeah, it's good. Good to have a bit of nice weather. Hopefully, for everybody who is tuning in this evening, it's a fine evening as it is here in Cardiff at the minute, and a good evening to everybody who has tuned in. It is great to do these live. A little bit of housekeeping before we get started. Of course, none of the things that we discuss should be taken as financial advice. This is for informational and hopefully entertainment purposes only. And just to get us started, if you have any thoughts that you'd like to share with us in the chat, or any questions you'd like me to ask Sam, do feel free just to post it in the chat. And indeed, if there's any themes you'd like us to cover in future episodes of Southbank Live, do please let us know in the comments below this video, as we shall, of course, be uploading this as a recording as well. Just to get us started, I thought we'd start on a quite light-hearted note with our long-short segment, where we take a look at what's been going on over the past few days and are bullish and bearish on one thing or another. It doesn't have to be financial assets. It can be behavior, it can be trends, it can be really anything. Sam, what would be your long for this evening?
Well, my long, we're going to talk about a little bit more in depth in tonight's episode, but I'm still very much currently long Bitcoin. All the activity I see in this space, the shift of governments that want to get into crypto assets and their continued push towards what I anticipate will be central bank digital currencies. Things like, the continued strength of the hash rate on the Bitcoin network. I think where we're at the moment, I just can't see there to be any other way than to be long on Bitcoin.
That's quite a strong view, but I'd expect nothing less from you, Sam, at the minute. For your short, what would you be short this week?
Right, so this one's a little bit more interesting, probably a little more unpredictable coming from me, or maybe not. But I'm short on the SPAC that the Trump Media and Technology Group is coming to market with. I think, what is it? The Digital World Acquisition Corp. That's it. I'm short that because of Elon buying Twitter. So if Elon's buying Twitter and he claims it is going to be the platform of free speech, that means Trump's coming back to Twitter, folks. Whoop whoop.
Exactly. So why does he need the SPAC anymore? What else would it acquire instead?
Why does he need his own free speech platform if Twitter is exactly that and comes with all the users? So yeah, I interestingly, the SPAC Digital World acquisition has been hammered over the last month or so, and I think it's going to just continue to get crushed because I just don't see much life in the Trump Media Technology Group.
That's interesting. Surely they could think of something else to acquire, though, Sam. They've got plenty of money to spend on companies. Maybe they could find some parallel Trump-focused platform.
The irony would be if they end up buying it off Elon, Twitter off Elon for a premium after the fact. We were discussing this, folks, just off camera before we got started today about Twitter, and I've come to the conclusion that this is my crystal ball. This is my looking into the future, that we'll see a post from Elon at some stage in the next month or so saying that he will take Twitter private at $69. You heard it here first, and quite possibly the only place you'll hear it. But that's my prediction.
It does feel like such a long time ago that Elon Musk went on Twitter and said he was taking Tesla private at 420. Was that 2018 or 2019, Sam? Can you remember? I feel nostalgic.
I do remember. And the stock price of Tesla went absolutely bonkers afterwards. And I mean, it still did. And then remember, it got to some obscene level. And then they did a stock split. And then it continued to then pump after the stock split as well. Maybe Elon's the golden touch for Twitter. But I think it's the death knell for the Trump Media and Technology Group.
That's a very interesting pair, the Trump Media group and then with Twitter as well. It does depend whether or not Elon Musk does buy Twitter. As I understand it, the ink has yet to be dry and the stamp sealed, etc., etc. But it will be interesting to see what happens. I think my long for this week is Twitter, for that matter, because while Musk says he wants to take it private, he didn't take Tesla private ultimately, and maybe he'll enjoy pumping the Twitter stock price the same way he's managed to get away with doing it for Tesla. In terms of long for this week, in terms of my short for this week. I was thinking about this for a little while, and while there are lots of candidates at the minute, I think I'm probably just going to be short cash, as it does feel like inflation is not really going anywhere. And this does tie in a little bit to what we were discussing this evening with central bank digital currencies and all that kind of thing. Good evening to everybody in chat. It seems we have quite a lively crowd here this evening, which is great. Hello to Andrew and AJ, MW, Storm, Natalia, and Gavin and Kazi, for that matter. Craig humbly requests, Sam, that you mirror your screen so that he is not distracted by all of the book titles you've got in the background. Being able to read them is apparently quite a big distraction. There, your wish
Problem
is
solved.
Sam's command. There we are. Problem solved. Hope you like that, Craig. That doesn't distract anybody. And do let us know.
For the fans, Boaz.
Yeah, exactly. Knows how to respond to the crowd. Even I don't know how to do that on mine. It's a good thing that you're on here, not me. On the topic of long short, by the way, it is great to see some suggestions from folks in the chat. Do feel free to share with us what your long, your short is for this episode. Just to get us started, Sam, get into the meaty stuff this evening, there was a chart I'd like to show you.
Yep.
And this is of a social media stock ETF. And during the lockdown from 2020 onward, obviously saw an absolutely incredible rise in the price of these social media stocks, mostly your Facebooks and your Twitters, for that matter, and things like that. But it is a big combination. But right now, it has crashed down to where it was back in March 2018. That's a chart from Fuller Tracy Money, by the way, and I think it tells a certain story with how during the lockdown, everyone became totally consumed with this, with the social media investing trend. You got lots of new people into the game. You got lots of old school players who just went really long on tech. And I thought the recent crash of this ETF maybe shows that trend has changed, that this fad, as it were, if it is a fad, has evaporated somewhat. And social media stocks, of course, have a lot of correlation with Bitcoin and with the crypto sector as a whole, just with Bitcoin being much, much, much more volatile. And I was wanting to ask you what message this sends and whether or not we should be paying attention to the social media stocks when we're thinking of crypto more generally.
When you talk about social media stocks, are you talking about the likes of Twitter and Meta, or are you talking about the stocks that social media tends to have trending on them?
That's good. That's a good question, isn't it? I would stick with the likes of Facebook and Twitter, and of course, your giants like Google and Apple as well. Though the stocks that trend on it, and indeed the cryptos that trend on Twitter, have of course been found to be delivering an awful lot of alpha for folks who get in very, very early on it.
Yeah, I think you can probably come at this two ways, and from both of those is that that probably reflects, if you're talking about the likes of Facebook and Twitter, even Google to a certain extent. If you're talking about those social media companies, that probably plays more into the kind of idea of Bitcoin in particular, and sort of the rest of the crypto market, which still tends to follow Bitcoin quite closely, and it's quite correlated there. That they are correlated to tech or to the FANG stocks that exist on the market, and so that's been something that's sort of been around for the last sort of 5 years or so. I'd say it's really kind of been a decent theory, and there's talk, and I know Charlie Morris has been big on this as well, around a decoupling potentially coming as well, and the correlation between that. The way the crypto market's sort of always been is that it's always kind of just moved in line with how much coverage it gets. It's a weirdly social market in terms of, I can remember going all the way back to sort of 2012 and 2013, even 2011. So you sort of through 2011 and 2012, no one really talked about it. It wasn't really well known. And every time that the price would pump, it would be like a flash of media exposure within the mainstream community. So like when Adrian Chen wrote that article on the Silk Road, Bitcoin got quite a pump because it was talked about as the medium of currency within that platform. And then it sort of fell away. And then in 2013, it really came back into focus, obviously, because of the issues in Cyprus and then the US debt ceiling towards the end of the year in 2013 as well. And so when Bitcoin first went past the price of an ounce of gold, it was everywhere. It was in all the financial papers. It was on all the financial websites. And the price it was a self-fulfilling prophecy. It just kind of tended to follow. And then it fell out of favor and then it wasn't talked about. And it goes through these cycles of being talked about, covered in the mainstream media, covered on social media. And it's when you start to really see, and you can track it. So a lot of people also do a lot of work on the correlation between the prices of crypto and, the Google Analytics, where you can track how much, certain things are talked about and mentioned and searched for on Google. It does tend to follow some of those charts as well. So it's an interesting one to follow. And I think what this all ends up coming back to is if you condense all of that into one key point, it's an adoption story with Bitcoin and with crypto. More so Bitcoin. And again, as I say, the rest of the market tends to follow, but it's an adoption story. And I'm certainly of the view that as adoption continues to increase, the value continues to increase as well. And it's that ongoing network effect that continues to at least in terms of fiat converted money. And this is all on the backdrop as well of, the central banks and governments having poor monetary and fiscal policy, which they have had done for a very, very long time. And I don't see any signs of that abating. So you kind of got these multiple factors playing into it around social media, the tech stocks, social media in terms of the actual coverage and use of crypto talked about and its utility within those communities. And then on the backdrop of that, of all the failings of centralized authorities.
Yeah, there's a lot we could unpick there. And on the topic of centralized authorities, we do get a question here regarding central bank digital currencies. Network Ninja, who asks, how close are we from launching a CBDC in the UK? And Apex Cypher, who comments that Italy's social credit wallet proves that CBDCs are starting in Europe. Now, Sam, it wasn't too long ago that Rishi Sunak was suggesting Britcoin, and since then he's suggested that the Royal Mint should start minting NFTs as well. So certainly, there's a lot of support for that now coming from the Exchequer. But how quickly do you think we could get a central bank digital currency or a government-issued cryptocurrency here in the UK?
I'm surprised he didn't throw the term Web3 in there just to cover all the buzzwords of the day. Look, I think realistically, if people are expecting a central bank digital currency or Bitcoin, I genuinely believe it's coming, but it's not. I think it's going to be a couple of years away. I just don't think they can move fast enough. They're a big hulking, mountain that isn't shifted easily, and they've got a lot of issues that they've got to kind of get around to even get that. But I think people also probably need to realize that the current monetary system that we are all used to isn't that dissimilar to a central bank digital currency already. The key differentiator is that you, rather than holding an online bank account with Lloyds or HSBC or NatWest or whatever it might be, Barclays, these big retail banks, is that it'll be held directly with the Bank of England. So it cuts out that retail aspect of the banking system. So I also think that one of the things that's going to prolong an actual Bitcoin hitting us, and that's not to say that it won't, I genuinely believe it will, is that I don't think the retail banks are going to be particularly happy about it, because I think it's going to cut off a lot of their lead generation, really, for the products that they sell to people. So I think there's some issues to be ironed out within the existing system. But what this does is this also goes to reinforce just how poorly constructed the sort of current centralized traditional system is that it can't change with great speed or urgency, is that there are a lot of issues and problems with it that are systemic. And I think that we will see it, but I just don't think we'll see it within the next 12 months or probably even 18 or 24 months. But I would very much expect that by the end of this decade, we'll all be will all have been issued. That's not to say we'll be using it. But will all have been issued with a central bank digital currency wallet, probably tied in some way to your passport, which may then be digital as well. Because if you think about some of the issues that the civil service is having around just even things like getting people's passports and driver's license issued right now, I don't think it's a stretch to think that those things will go digital along with your money as well.
Certainly, a lot we could unpick there again, Sam. You're very good at this as ever. With on the topic of central bank digital currencies and where we see them going in the rest of the world. So if we look further ashore from just here in Blighty, and you're looking into Europe, do you think this is something that will take off there? This is something we will observe occurring in other countries first. Of course, over in China, they're much, much more advanced with this kind of thing. But when you're thinking close to home, just in continental Europe, is that something you think we'll witness there before we see it come here in the UK?
Yeah, it's a size and mobility kind of thing, right? So actually it's probably an authoritarian thing first and foremost, and then it's a size and mobility thing. So you will find the more authoritarian governments are able to move on this faster because they've probably had it in the works for a bit longer, and don't really have to ask permission to do so. So they will move on it, and China's moved on it, and they're probably going to look to roll out, I would imagine, across the entire Belt and Road Initiative in every country that's indebted to them for the rest of their lives. I would imagine that they roll it out to them as well. So, you could see pretty much all of Asia being covered by this, with, probably Australasia as well for that matter. And I look forward to going back to Australia with my Yuan digital wallet at some point in the next decade. Look, I think all countries are going to adopt it because you're going to find that it's going to be a much easier way for them to facilitate commerce and trade within a centralized system. It's going to eliminate the black economy, the cash economy. So again, we are literally talking about the end of cash, because there is a very thriving cash economy that goes on here in the UK and in the US and all over the world, where the government doesn't collect taxes. They don't know where it's going. They don't know who's getting it, receiving it. It's not declared. And there's a big market for that, which they don't like. A central bank digital currency eliminates that very easily, very quickly. So they are able to collect things like taxes and to charge national insurance on, this, that, and the other. And they're able to do a lot more things efficiently within the collection of money from people. So I think that's a very big motivating factor for all governments to try and do. And if one country is going to start doing it, then the rest of them are going to start doing it. But interestingly, this kind of also plays into why I'm very bullish about what's happening in crypto, is this idea around game theory of one country doing something and then others looking to do it as well. Otherwise, they get left behind.
Yeah, there's a lot we can explore there too. I think on the game theory side, I find it quite interesting when you hear about different governments taxing crypto differently, because it always creates an opportunity for every country which does tax crypto heavily, or even just the same way that it taxes regular capital gains and things like that. It creates an opportunity for other nations who aren't nearly so restrictive to simply not do it. So the likes of Portugal, and then of course you find some of the Caribbean islands treating things differently there, and then absorbing all of this crypto wealth, which then goes over there to stay and buy houses and things like that. I'm sure there's plenty more we could explore, but we do have a very lively chat this evening, plenty of questions. A good evening to Hannah over on LinkedIn. Hello to Trump Winner, who has returned. I recall this username from a while back. It's good to see you back here. MW says, surely you're not short of cash, Boaz. Well, I'm very flattered there. Though when we're giving our long and our shorts, we are just speaking broadly as... and I do feel like with inflation at 8% effectively, that I think everyone who has a bank account is going to be somewhat short of cash in the near future. Do get a comment on thoughts about actual cash in an actual box, in deep protection, buried in the garden. Any advantages in your opinion? Well, Robert, I would say don't give too much away online about what might be buried in your garden. But it all depends on what you're going to be using it for ultimately. And how much value you hope it keeps up until that point. Good question from Giddy here, which I think is quite relevant. How would Sam address the Bitcoin energy crisis? Now, I would say that there isn't an energy crisis with Bitcoin at all, and it actually incentivizes a lot of the renewable energy initiatives out there. But Sam, what's your take on it?
It's a very similar take to yours. This idea of a crisis, So the funny thing about this is such an old story. I was going through some stuff I was writing back in 2014. So in the last couple of weeks, I've written about a presentation I gave in Sydney in late March 2014, talking to a bunch, I think it was about 40 or 50 private investors about Bitcoin, specifically about Bitcoin. And back then, I was covering this idea that Bitcoin is this giant energy sucker that's going to increase, the temperature of the world and melt the polar ice caps, and Miami would be underwater and Amsterdam wouldn't exist anymore. Here we are 8 years down the track, and the same garbage is being trotted out that Bitcoin is going to end the world. And it's just not even a story. And that's what gets really frustrating about it, is people are like, oh, you're not addressing the issues. I'm like, we are addressing the issues because there aren't any. The Bitcoin has always been proactive in terms of efficient and renewable mining, using the best technology to consume the lowest amount of power. Because listen, it's in the miners' interest to keep their costs as low as humanly possible, and to do that, they need cheap energy. To get cheap energy, they use renewable sources to get the cheapest of energy. And so there's been a lot of development in this space around efficient, accessible energy, whether it's renewables or energy capture from energy waste from other sources that go into things like mining and drilling. And if you want to have a fair fight on this issue, walk into the center of London at nighttime, have a look at all of the buildings that exist in the middle of London that are empty and have got all the lights on. Go down to Canary Wharf and look at all the banking buildings that exist there, that are running servers, that have got all the lights on, that have got fully functioning energy sapping buildings. And then we'll maybe have a discussion about what the current system and what the crypto system actually does in terms of energy. It's just such a non-argument to have about this anymore, that it's really just kind of, what else are they going to be trying to be cynical about crypto and Bitcoin with now? Or what's the next excuse for them to not realize how impactful this is going to be?
I do feel very, very wary of folks who are saying that energy consumption equals bad, and as though there's been some meeting that has been had somewhere, and they've decided that if anything that consumes a lot of energy must be bad, and energy consumption in general should be constrained, because a world with less energy consumption in it is ultimately a much less civilized world, or at least is a much different world than the one we live in. And it's not something that you really want a central authority to be controlling and rationing out to people. That's a very Soviet way of thinking, and ultimately wasn't a very happy place to live in the end.
I'll give you another example, right? So again, when I was writing about this in 2014, I had a guy write to me, and he asked me whether he should continue to mine Bitcoin back then. And he was explaining how he had his mining rigs. He had a bunch of ASIC mining rigs, and they were set up in the backyard in a shed that was soundproofed. He had them linked to solar panel, and his energy cost was effectively naught. His only concern was that he'd be wasting his time, and he spent this money on ASICs. But effectively, his energy cost zero. So, like, how is that bad energy consumption? And then you look at all of the major corporations, like, Argo listed on the London Stock Exchange here and co-listed over in the States. They're pushing for renewable energy for all of their mining operations. They're not the only one as well. I can't remember the name off the top of my head. Scientific something. Anyway, again, renewable energy sources. It was only a couple of years ago I was talking to somebody again about operating mining rigs submerged in water, so that the efficiency of the actual mining rigs would be astronomically better than what it was. Be better than any server running that a bank would be running. So, there's just so much happening in this space that the mainstream never tells you about. All you hear about is just uninformed views saying that it's going to increase it consumes the energy of Switzerland or some garbage like that. It's just such a non-topic anymore.
Yeah, it's a new country each time. Whenever it scales up again, you'll hear it's compared to another country.
It was Iceland originally.
and then it was Ireland, and then New Zealand. I think there's a website where it just does it by country as Bitcoin scales up a bit. I think folks who are very concerned about energy consumption, there are much richer targets much closer to home than things like the Bitcoin network. So things like tumble drying, for example, and Christmas lights consume an awfully enormous amount of energy, but nobody
I
was.
can guarantee you every year I consume more energy with my Christmas lights than I ever did mining Bitcoin.
Well, that's very
I
reassuring.
go full Griswold at Christmas time.
We've got some very good questions here in the chat. This one's from Nikki over on LinkedIn. Okay, I understand about you being long on Bitcoin, Sam, but crypto is no longer just about Bitcoin. There are so many more coins in the frame right now, e.g. XRP, XLM, Stellar Lumens, Dogecoin, and all other metal-backed cryptocurrency now available on the individual exchanges. In fact, I thought that Bitcoin was gradually going to disappear. Do you agree?
Well, I don't agree. I mean, I don't agree that Bitcoin is going to disappear, but I completely agree that the crypto ecosystem is far more than just Bitcoin. What I'm talking about in respect here in terms of how the fiat converted prices of the crypto market in general tend to move, and they do tend to still follow the direction that Bitcoin moves, because a lot of things are priced in Bitcoin, and Bitcoin tends to be one of the major trading pairs on exchanges like Binance, FTX, Coinbase, and all of that. So you tend to find that when things are bought and sold, they do so in Bitcoin and then done so back into fiat money, because Bitcoin is the easiest and most abundant on and off ramp from fiat money into crypto. It's the gateway. So the market does tend to follow Bitcoin very much so in that way. And so I think we should really be looking at Bitcoin as the global reserve of the crypto ecosystem. I think longer term it'll be the global reserve of the entire world if certain pieces of the chessboard move into place in the right way. But at least within the crypto world, Bitcoin is definitely the reserve currency. But you're right, there's so many other crypto out there, but they all serve different functions. And realistically, we shouldn't talk about them all as crypto. We shouldn't lump Bitcoin and crypto into two categories, or even Bitcoin and Ethereum and then crypto into categories. We should realistically be giving everything the individual time of day that it deserves, or doesn't deserve for that matter. Because most of them tend to be inherently different about what they are trying to do. And they all have different unique propositions of what they can do, how they can interact, how they are relevant in a world of the future. So I think we should look at them in the same way that we would look at tech stocks. Give each on their own and understand what the fundamental network is, what the value is there, what they're trying to do. Will it be relevant? Are they fixing a problem that needs to be fixed, or are they creating a fix to a problem that doesn't exist? So you should look at them all, consider them all, understand that it's much, much more than just Bitcoin and the top 100 or 50 or 20 crypto out there for sure.
Over the past few crypto cycles, you've been there for all of them, Sam. You've seen the various flavors that they presented and the new innovations and the boom bust and the hype over certain things. So, ICOs in 2017, then we've had more recently DeFi, the summer of DeFi. And then after that, we've got this big NFT boom bust cycle. And there have been loads of smaller ones linked in between. When you're looking forward for the crypto space in general, at the minute we're not in peak boom time at all. The Bitcoin has not fallen nearly so hard as many of the doomsayers have said. It's not exactly Christmas for Bitcoin at the minute, but it's still holding up. What do you think we're going to see out of the broader digital asset space over the coming, say, 6 months?
I think it's a tricky position, right? These previous cycles before have been kind of more open to the market, to the free market. It does certainly feel like there's a larger element of, this sort of coincides with, the increasing use of buzzwords like Web3, is that the traditional money has kind of realized that there's an opportunity for them to make more of their traditional money. And so they're kind of bastardizing the space a little bit with some of the ways that they're getting involved. And so that's why I sort of talk about looking at each crypto somewhat on its own merits, because some of them are really just like the tech stocks that propagate the current, stock market. And so I think what we're kind of seeing evolve is, even within the crypto world, you're kind of seeing this two-speed market evolve, where you've got what are called crypto, but are really just like tech startups and tech companies that happen to exist as tokens. So there is opportunity within those. And I think things like DAOs, decentralized autonomous organizations, will kind of probably fall down into that category as well. is that they end up being really kind of really end up being securities, I suppose, or investment funds or managed funds. The DAO is at the moment, DAOs are the managed fund of the crypto world. And some of them are even taking, management and performance fees and things like that. So it's like, that also then calls for regulation. So I'm sort of broadening out the scope of the question a little bit here, but I think what we're going to see is this kind of continued conflict come with the origins and the ethos of what crypto was kind of built on and founded on, about free, open market, decentralized, permissionless networks, and this kind of internal butting of the heads against the very centralized, controlled, traditional world of finance and venture capital that's really starting to want to dig its teeth in here. And so we've got to be careful that some of the ways in which crypto projects and networks do develop doesn't get overly killed off by that centralization aspect of it as well. Not saying either is independently bad, and quite possibly even a centralized, section of crypto can still be beneficial. I mean, again, I don't want to hammer down too hard on the world of traditional banking and finance. It's built some pretty good things in our world, and we are talking with people here on a live stream, and that hasn't come from the crypto world. But moving forward, I think we're going to start to see a lot more of that. We're going to start to see I think we're going to see regulators start to dip their nose a little bit harder again into what is the security and who's really in breach and pushing the boundaries of securities laws. Because there is so many, though, they're going to struggle to really capture them all. I think decentralized autonomous organizations and DAOs are going to continue to be a thing. NFTs we've seen come and go once before. This is the second boom bust cycle of NFTs. It hasn't really busted yet. Probably won't necessarily bust. NFTs are far bigger than just generative art and profile pictures. So again, there's another conversation to have just around that and what NFTs can entail and the potential that really I think that holds within so many different industries. But then ultimately we're still looking, I think, we haven't really seen layer one networks reach their full potential, scale, efficiency, and reach. So the adoption side of things, I think, is still very important to the growth of the entire sector, about layer one networks really being able to reach, 1 billion people and more, to properly bank the unbanked, to have the ways which they can participate in a financial system that doesn't erode their wealth at 8% every year, that gives them access to products in a way that benefits and suits them rather than what benefits and suits the corporation that is selling it to them. So we haven't even got there yet. We haven't got to that stage. And so I still think we will continue to see that progress, and we'll see these ancillary kind of points like NFTs and DAOs and play to earn gaming and DeFi, and that will all be around and they will all continue to grow. But I think the growth of layer one networks probably comes before those really go into sort of velocity territory.
Do you think in general, over, say, the next few months, is this going to be a period where there's going to be a lot of building, but there won't be too much price action, or the other way around, where there's lots of price action, but there's not actually a huge amount of development going on behind the scenes?
I don't really know. To be honest, I don't really care. I struggle to look sort of 6 months ahead. I really try and keep an eye on, what does this look like in a year to two? Because if you were continuously converting, and you know this as well as anyone, if you can continually converting these things back to fiat prices, the volatility swings, just from the general behavior of investors all over the world and in all markets, is just going to crush you. So I try to not worry about the price so much, but keep an eye on things like adoption, growth, user numbers, value being added to staking platforms, a whole bunch of different metrics for different crypto that are applicable to some, not applicable to others. They're the things that you want to be looking at. And like you say, what's the progress? What are they building? I think if you keep an eye on the Biddle, I don't even know how to pronounce Biddle. It's the expansion of HODL.
Yeah, Biddle.
If you focus on that, I think that's where you get, I hate the term. I think that's where you get the alpha in the crypto sector, is focusing on what is being built and is it starting to grow and expand and achieve the network effect is still very powerful. Seems to kind of be forgotten. People are more interested in what VC is going to throw money at the project next rather than what the actual user growth is and adoption of particular projects. So those are the sorts of things I'd be focusing on.
Yeah. Thanks for all of the comments in the chat, folks. Very lively indeed. It's great to see so much interaction. And it's great to hear from an audience live as ever. Andrew is long Brains SA and short Wooflu. Now, this is very interesting long from Andrew here. Brains SA, the Welsh beer, which actually, if I crane over, I can actually see the big chimney in Cardiff, which has Brains written down it. I had actually not had Brains until I'd come to Cardiff, but it's good to see that Andrew is long that this week. We do have quite a few. We do have quite a few comments regarding specifically XRP, Sam, which we have addressed a few times in our beer podcast, Booze, Booms and Busts, speaking about the XRP standard. But for folks who are new to XRP, Trump winner, come on, XRP, I'm in deep, and quite a few other.
If you're ever saying I'm in deep for any position you're in, you maybe need to rethink your approach to this market.
Yeah, that's not something you want to be saying about many things. I think there is a comment. Well, actually, first before we get because Nikki earlier did mention XRP as well, and she does follow up with a question. So saying yes, for now, Bitcoin is the main reference point for pricing in the crypto market. Regarding your answer, saying Bitcoin is the reserve asset in the crypto space, but do you think realistically that this position will prevail over the next 5 years? So when you think of the longevity of Bitcoin, is Bitcoin still going to be this this main onboarding point for so many in the crypto space?
Yeah.
Okay. Right. Question answered. Another one regarding the altcoin space, which is quite specific. We maybe don't want to go too much into the weeds here. But more recently, MW asks, why has Luna been so hot, Sam? So for folks who aren't familiar, Luna is the governance token, or the something of the equity token almost, for the Terra ecosystem. And Terra is a stablecoin, so it is aiming to have the same value as the $1. However, it doesn't actually maintain a proper peg for doing that. So it doesn't actually own any US dollars and then issues some Terra on top of it. It's what's known as an algorithmic stablecoin. And inside that ecosystem, there is the Luna token as well, which trades much more speculatively. It's not stable at all. So just quickly, Sam, do you have any thoughts on the Luna, the Luna/Terra ecosystem?
Not really. I think a bit of what's been going on is tied in with what the Anchor protocol's been able to do. Whether it's sustainable or not, again, without going too deep into it, because I think a lot of people won't understand anything I just said. Whether that Anchor's sustainable or not, whether this idea of buying up a whole bunch of Bitcoin to underpin everything they're doing there is smart or not. I mean, that's probably not a bad idea, but I don't know. Look, some of the moves in some of these larger crypto come out of left field. Doesn't really make much sense. You get, people that have either been lucky with having their bags early and just ridden it up, or those that have come in a bit later and bought up pretty high and are either sitting at a minor gain or a bit of a loss, hoping that it'll pump again. And it sort of just plays into this whole, I want to know what my bags are going to do next. And it's like, I don't really know the answer to all of that. It's interesting. I've had a look at what's going on with Terra and Luna. I don't know. I just don't know. I don't. It's too hard to call based on. There's a lot of weird action and uncertainty in that space, and I'd be happy to just sit and wait and see what happens. This is the other thing, right? I think this is a pretty important point for people to understand. There's a lot of change happening in the world right now. Even taking finance and banking out of this and crypto out of this, there's a lot of stuff going on. But there's always a lot of stuff going on. We just sort of forget about the stuff that happened a couple of years ago because it was a couple of years ago. So we're always living in the moment, so to speak.
Yep.
What's going on now with the development around the crypto space is really exciting, but people get really, really, really caught up in the short-term stuff. And I think that there's an element that's what makes it so exciting. And that's, because there are opportunities to make some pretty crazy fast money in this market. And to be honest, it's a rarity. It's the outlier effect rather than the norm. And so people should expect that that won't necessarily happen to you, because you never hear about people who lose a truck ton of money, or people who don't make a truck ton of money. And so I think it's important to just take a step back and have some perspective and understand that you don't need to be in a rush. The most important thing you can do in the world of crypto, even if you've been in it for 2 or 3 years and you believe you're an expert, people call me an expert only because I've been around it for so long. I don't think of myself as an expert because I am always learning new stuff. I wrote about this. We spoke about it on Booze, Booms and Busts last week, Boaz. I got scammed like last week. It was stupid, but I had the wherewithal to make sure I didn't lose anything of value. But I got scammed, and I'm happy to admit it. And it happens to me. And I've been doing this for over a decade now. And so people have just got to take some time to learn and understand, even just the core fund. Like I'd love to see in the comments, anybody listening today, how many of you have actually read Satoshi's white paper or the email threads between the cryptography people, between Satoshi, Hal Finney, and those guys from the early days? Just yes, no, let me know in the comments. I'd love to see, because I don't think most people have. I don't think most people understand where this has come from and realistically what it's trying to build out. I think that's a very important foundation to get an understanding of this entire ecosystem. So take your time, people. Just take a chill pill and learn and understand, and you've got time on your side.
Yeah, reading Satoshi's white paper probably would mark you out as being some kind of purist these days. But when you think about it, it's really just the basics. It's the fundamentals. I think.
Yeah, it is. It's the foundation, right? And I'm looking at the comments now, and there's nothing wrong with not having read it, but I think it should be compulsory reading in the same way that anything, is compulsory reading for any major subject. If you're investing, you don't just sort of not learn about what a stock is. So I think people, if you've answered no, go to the Nakamoto Foundation, the Nakamoto Institute, check out the white paper, check out that cryptography email thread, and it'll blow your mind. I guarantee it, because it blew my mind, and that's what set me on the path. It's just interesting stuff to read.
Again, we have so many good questions here in the chat. Thanks for all these questions, folks. They are very good indeed. When we're thinking of, I'm just wondering which one actually to go for here, because we could really take this conversation in any direction.
Can I pick one of the first questions? Is somebody asked, I can't remember who it was now, but somebody asked if I was an AC/DC fan.
Yeah, that's an easy one.
That's an easy one. Yeah, I am. I love AC/DC amongst a whole bunch of other music, but absolutely, I love a bit of AC/DC.
Well, I'm glad we got that out of the way. We're answering the big questions this evening.
Hard-hitting stuff. Yeah.
Now, on the topic of DeFi, so we do have quite a few questions actually on what decentralized finance is all about and what its objectives are. And it's an interesting, a portmanteau of words. Decentralized finance has just come together for DeFi. I don't know if anybody has specifically claimed ownership of where that actually came from, but it's become very, very popular. Do you think, Sam, when you're looking at that space, is the ultimate outcome to make banks irrelevant? Is that the whole point?
That's a good question. My first reaction would have been yes. But when you think about the systems that have been put in place, they're replicating what banks do, but it's almost in a fairer way. It's kind of hard to describe, but it's like if the free market operated a bank, then you kind of come out with DeFi. Look, there's also, it's one of those things, right? And there was an interview, I was looking at it today. I was looking at some of the captures from it today. I think it was Sam Bankman-Fried was talking on a podcast or something, and he described DeFi as you put money into a box and take out money while other people are putting more money into that box, expecting more money out. And so as crude as that is, it's a pretty fair description of DeFi right now, because when you look at a lot of the DeFi platforms out there, there's not many genuine ones that really work well. There are a handful, and I won't go into them now, but I'm sure people can find out through my socials sort of what I might be alluding to. But anyway, Some of them are literally you'll stake, you'll farm, your crypto, and you get paid out in the native governance token of that platform. And it's no different to another one. And so it's like you are generating value, but ultimately it is a bit of Ponzonomics, which is a great term to use, because I've seen plenty of DeFi platforms that have got massive APYs. Like I'm talking, I've seen some early days with 6-figure APYs where you could just juice the token out of it. And basically, it was just used to juice out the governance token, sell it into the market, and then just sort of rinse, repeat until it got to a point where the prices got deflated so much that it just wasn't economical anymore. It's interesting to watch those play out, because what happens is if you get this rush into some of these farms, these yield farms, and the APYs go from like 1,000,000% APY, and I'm talking minutes. You can watch it real time. They go to like 400,000, 200,000. 300, 150,000, 50,000. And within a couple of hours, they're at like 1,000. And then within a couple of days, they're at like 20. And so you end up with these people that don't know what they're doing. They don't understand things like impairment loss, the shift in value of the tokens that you are actually staking in the platform, and when they move for or against each other, and how that can actually crush the value of what you farmed. There's so much in there that people don't get and just want to ape straight into DeFi because they see these crazy numbers, which are attainable, but only for a fleeting moment. It's crazy risky. And it's something that you really shouldn't even go near, let alone smell, until you understand. And that's what comes back to that point that I was saying before. You shouldn't really, you've got time up your sleeve. DeFi is not something that's just going to come in and disappear. It's going to stick around for a while. It's going to mature. There's going to be a lot of good stuff. Going to be a lot of bad stuff. I mean, we're seeing hacks and exploits all the time, which is what you find from early stage technology development. It's going to mature. It's going to get better, and it's going to take time to get there. So don't be in a rush, because if you are in a rush and you FOMO in, you're probably going to get burnt. I've seen it firsthand. When I first started testing out DeFi, I didn't really properly understand what impairment loss did until I was like, oh, that's what it does. And I basically withdrew my tokens at a loss. And it's like, well, that wasn't a fun experience. I don't really want to do that again. So you've got to learn. And sometimes just testing and trying yourself is a good way to do it. But don't do it with any money that you actually want to see again, because you will probably lose it, as I did with the first time that I did it. So, you've got to learn, understand, test, try, but don't be in a rush to do all these things.
So to answer the question whether or not DeFi is going to make banks irrelevant, I assume the answer is it's got quite a long way to go.
Yeah.
Fair enough. I think that's a fair answer. We do have a question here.
Yeah, to start with.
Well, no. It was good to get some context out there. We do have a good question from Guy, who asks, "Hi Boaz, Sam. Do you think that large multinationals will start to create their own blockchains and tokens/coins, e.g., UPS and FedEx, to track their consignments and payment systems?" That's a very interesting question. I think we do need to differentiate between what is a blockchain at this point and what is just a database, because a lot of what could be described as a database could also be sold as a blockchain by a cunning marketer. And it's very important to differentiate what is what. So, Sam, what do you think?
Yeah, I mean, I think probably the best way to describe it is public and private blockchains. Which, again, a private blockchain is really just a fancy database, like you said. IBM's been doing this for ages. Many years. Have been doing transport and logistics on blockchain stuff. I think they were originally using Ethereum. I think they might have been even using R3 or something like that. But don't quote me on that. That was I think. But they're using more or less private blockchains, which is fine, right? I don't see any issue with doing that. If you could, the aim of what they were trying to do is to maintain and track provenance of goods, right? Where they come from, what aspects of the supply chain have they touched along the way, so that that if you're getting a vegan product on the shelf, you can scan a QR code and that you can see along the way how it got there, and you can verify that if it touched the hands of this company, that that slaughtered a bunch of cows on land they needed to build their factory. It's probably maybe it's not vegan friendly as it maybe you maybe think it is. So you can just understand where everything's come from. So that sort of thing I think is really big. There was a company based out in Asia. I can't remember the name of them. And they were, again, using blockchain technology. Again, I think they were sort of a hybrid model of public and private blockchains to just track the movement of goods through their transport and logistics channels. It can be useful in many applications, but also you've got to understand that you don't necessarily have to have a crypto attached to those things. What the value is if, and I remember hearing about this very early on when someone was talking about Ethereum. It might have been back in 2016 or 2017. And they were effectively, I can't remember the year, but they were saying that you can build basically these test environments on a private blockchain that's effectively a testnet of Ethereum, with the longer view that you roll it out to the public chain, because the public chain actually brings a lot of benefits around things like security, and ensuring that, when the transactions to verify, X, Y, and Z and smart contracts are done, it's done on the public blockchain. That brings a lot more security and a lot more trust to what is going on than a private one does. And it can be then verified by anyone, anywhere, at any time. So there are advantages to a public blockchain that can scale. Ethereum, again, this is what comes back again to that layer one scale thing that I was talking about before. That's where the growth comes. If we do get that scale, then I think we'll start to see a lot of these test environments on private blockchains start to hybrid across and then move to the public blockchains for the benefits that they bring. So a lot of interesting stuff going on in that space. It's not just transport logistics. It's everything from sports and entertainment to, identity. We obviously talk a lot about banking and finance, but there's a lot of different industries that could be looking at ways they can use blockchain technology, both private and public networks.
Yeah, it's definitely an interesting sector to watch. You have seen attempts to use blockchain for things like verifying diamonds in terms of their provenance and things like that, which is very interesting. But when it comes to really broad scale public blockchains used for certain utilities, Bitcoin is still ultimately the greatest example of an effective public blockchain for all of the naysayers who say that Bitcoin's not useful for anything. It's just a Ponzi tulip, etc., etc., etc. We are getting on a little bit for time here, folks. We do have plenty of questions, so I think we'll pick it up a little bit here. An interesting question from Evan here. What is stopping governments from buying up Bitcoin supply using printed money, brackets backed by nothing? Well, Evan, I would probably say the will to do it. Though a lot of people think that this could happen. I'm probably looking for the Swiss central bank. If someone was going to do it, that was a developed central bank, I'd probably be looking at the Swiss. They've already done some pretty gangster stuff when it comes to their franc printing efforts, including printing lots of francs in the billions in order to then buy American tech companies, because they're prohibited from buying stock on their own stock exchanges. So they just go abroad, and it effectively works a bit like a currency devaluation, because they're printing francs to then buy assets that are priced in dollars. And if the Swiss did see Bitcoin perhaps as a digital bearer asset with some properties of gold, then perhaps the Swiss might be interested in printing a lot of francs in order to get their hands on some. Any thoughts on that, Sam? Any central banks you'd be looking at, or governments you'd be looking at who might want to start buying a bit of Bitcoin? Though I think, how much Bitcoin does the US government now got? There's like $4 billion that they've seized, and they haven't done anything with it.
Interestingly, the US government is sitting on a lot more Bitcoin than people realize, because, like you say, they've seized a lot of it. I think so. We're starting to see this play out. I remember writing about this when I first started penning my book in 2016 about the idea that small governments, small nations would start to look to utilize Bitcoin because they see it as an opportunity for economic growth and development within their own countries. We then saw that play out with El Salvador. We just have seen that this week. The Central African Republic, I believe, is legalizing Bitcoin as tender. I think we'll start to see other small nations realize that this is possibly an opportunity for them to do this, to add Bitcoin, to maybe diversify their own needs away from the system that they are very much under the thumb by. And it's sort of a bit of an escape clause as much for them as it is a way to maybe just try and add some kind of economic value to whatever is effectively pretty struggling economies when you think about it. So
Yep.
I think we'll see more of that. And it'll be that snowball effect where a couple of small ones do it, and it's this game theory in play again, is where all of a sudden their neighbors start to go, oh, okay, Mango, maybe this is something we're missing a trick here. Maybe this is something we need to do too, or at least have a little bit of a dip into, and then just sort of goes from there. So I think we'll start to see more of it, and I wouldn't be surprised to see a larger government sort of start to move into that space too. I don't know if you and I have spoken about it. We're not at Southbank Live, but Texas is pretty keen on bringing Bitcoin into the fold. And if you were to talk about Texas as a country, its GDP is about the 9th largest in the world. So it's not just countries either that are thinking about this and moving into the space.
Yeah, it's a very good point. God bless Texas. Absolutely enormous patch of land. In response to Evan, actually, Stephen comments, Evan, how do you know that they haven't started buying up Bitcoin supply with printed money already? Which is a good question. There are certain agencies of governments which do have discretion to do things without letting anybody know. But when it comes to some of the larger ones like central banks, you'll find in plenty of countries they're actually restricted by law that they have to say what they're going to do before they do it, which in this case would be absolutely hilarious because you'd have all these central banks and whatever saying that they're going to buy Bitcoin and making the price go up by an extremely high amount just by announcing it before they actually weighed in.
Then you'd be able to track their movements anyway on the blockchain.
Yeah, indeed. You can't. No place to hide unless you're really, really clever in the blockchain space. We'll carry on going with a few more questions here. AJ asks, Boaz, you are in Wales, right? That's where the men are men and the sheep are nervous, or so the saying goes, or so I'm told at least. Well, AJ, funnily enough, people say that about Aberdeen as well, and that's where I'm from. So I'm
and
actually,
New Zealand.
and New Zealand for that matter. Maybe I should go to New Zealand next. Maybe we'll see. We do have a lot of questions here on Sam, your book, and indeed Nicholas asking where would be a good place to start investing in crypto for a brand new investor. Now, I'll leave it to you here because you've got quite a few different resources for this.
Yeah, I mean, so we've got a lot of resources. In terms of where to start, look, the most important thing when you're looking to start off in this space is winding back again to what I've said. Take the time to learn, understand, absorb what the space is all about. Go read the white paper, the Bitcoin white paper, read the information about what it is. We've got a lot of resources on Exponential Investor. I believe we're also coming out, I think it's tomorrow at 2 p.m. I've done a brand new interview. I've sat down with Nigel Farage because he and his followers want to know about this space. And I know a lot of people turn their nose up the fact that I'd even sit down with Nigel. Just the mention of Nigel and people start to kick off. But he speaks to a very large cohort of people in this country that deserve to know and get the right information and the accurate information and to understand what's happening in this world too. So I don't get political when it comes to this stuff. I want to talk to as many people in this country as I can about what is going on and how they can get started, but how they can get started in a way that helps them to identify and see the risks that are involved in this market, to understand about how to approach it from a psychological perspective, and how to start without you inherently get bombarded with skepticism and people saying that it's a scam, it's Ponzi, blah 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 blah. When you understand what's really gone on this space, how it's developed over the last what are we talking about now, 13 years, how it's developed over the last 13 years, and how really over the last 5 things have exploded as well. There's a lot of misinformation out there about what's really going on, what's coming down the track, and how you can get started and get involved in it all. I believe you can access that interview I've done with Nigel. I think there's a link in the description box of this broadcast tonight. So you can watch that interview tomorrow. It's free to watch. You just got to click on the link, chuck your email in so that you can get access to it. But I think that's a really good starting point because my discussion with him very much goes into some of the key things we've spoken about tonight and really what's coming and how I see this world evolving and moving forward. I've been pretty good over the last decade about my views on how this space has evolved and how it's going to keep evolving. And I think I'm pretty much on the money with it again. So again, that's a great place to start. There's a lot of, and as I said, we got a lot of resources through Southbank research about understanding crypto, getting started in it, how to do it in a smart way, understanding the risks, knowing what a scam looks like. I get so many emails from people that sadly get scammed. And it breaks my heart every time I see one because the way they get scammed is so avoidable. It's easy to identify all these red flags before you even get to that point where you're sending money to somebody. So that's a really big part of things as well. And, we got a whole bunch of information resources about that. So it's important to get the right information, to take your time and to not rush into this space.
Yeah, certainly. The fear and greed in crypto is quite exaggerated, even more so than you find in traditional markets. And you don't want to be FOMOing in and just throwing your money into it without knowing what you're doing. It really is a frontier market in every sense of the world, and that means that you really need to be sure of what you're getting into before you do it. As I would say, if the crypto market was a real market, you'd definitely only wonder if you were carrying a gun. Now, we are almost up on time, Sam. I thought we could do maybe two more comments here. There's an interesting comment here from Natalia over on LinkedIn. This was regarding your earlier point, Sam, about how governments would like to use CBDCs to eliminate the black market and the black economy. Sam speaks about potential elimination of the black economy, but let's not forget about the darknet and plenty of fraud and money laundering currently going on, as well as certain countries supposedly funding the military sector by means of the crypto market. Is it really possible to get rid of the black economy? Well, I would say, Natalia, that the central bank digital currency could be sold by saying that this will get rid of money laundering, etc., that does take place through cash. Regardless of whether or not it does, because let's always remember that governments do have entire espionage wings that obviously don't want their activities to be known by the banking authorities. They don't want anyone to know about it other than, of course, the people in charge. And governments would want to allow that to keep going. So they'd need to put in a few loopholes, I think, for central bank digital currencies to allow privacy for certain individuals or something like that. Sam, what would you say?
You make a good point. Remember, a central bank digital currency inherently is a currency of control from the central bank. So it's programmable money. So they can flick on and off features. And so they'll have features that you won't have. In my view, they'll have a privacy. They'll have when you get those great GDPR boxes about your cookies and stuff when you go to a new website. How good's GDPR been for everyone? How good is that little box every time you go to a new website? And you flick that little slider box. Yes, no, yes, no. They'll probably have a little privacy one that just goes privacy for us. Yes. Privacy for them. No. That's more likely how it'll work.
Yeah, I don't think a rollout of central bank digital currency here in the UK, at least, would be nearly as efficient and smooth and easy to use as everybody would like it to be, or at least it wouldn't be. There would certainly be a lot of rough edges if they did do something like that. A comment here from Apex Cypher saying that Lightning Network running on Bitcoin rails is an excellent use of the Bitcoin blockchain. I agree, Apex Cypher. Lightning is very good indeed. I think we'll just do one more question here this evening. We have indeed, as I said earlier, it has been a great chat. There has been lots and lots of very good questions here this evening. So there are also a couple of comments here regarding. Here's one good one. One sort of takeaway here, Sam. What you said was everyone should read Satoshi's white paper before they get into the crypto space, or at least if you're interested in it and you want to know what it's all about. So Robert, who does have, who earlier commented regarding mining crypto, this is something he's done before. He says, why? What problem exists that reading Satoshi et al. Will fix it? So Sam, why should our viewers here this evening read Satoshi's white paper?
Well, I think if you're legitimately wanting to understand what the potential of this market can be, I think you should go back to the origin of it and understand the thing that really kicked it off. And to be honest, Bitcoin wasn't the first digital currency we ever had. It actually sources a whole bunch of other research papers and information from others that contributed towards the creation of Bitcoin. But you've also got to remember when Bitcoin was created in 2009 out of the back of the global debt crisis or GFC or whatever you want to call it. Those origins are really important to understand because that sets the foundations for why we even I think, let me ask you, I mean, this is somewhat of a rhetorical question and not something we've got enough time to dig into today. But if central banks and the government had responsibly managed monetary and fiscal policy, arguably since the 70s, or had even not switched off the gold standard, would we even have cryptocurrencies today? I probably would think, if the global financial crisis never happened, if the world governments and banks weren't leveraged up to their eyeballs, bringing systemic risk to the banking and financial system, if we never had any of that, would we have cryptocurrency today? And I would probably argue that we wouldn't. And I think it's important to understand that trigger effect and then the creation of Bitcoin and then the subsequent development of a world of blockchain networks, open source, public access, permissionless, decentralized networks. Again, to the semantics of it, not all crypto are decentralized, but again, another conversation. But fundamentally, that concept and idea, which is deep rooted in why all of this even exists, why we're even talking about DeFi, NFTs, all this sort of thing. If there'd been responsible management of our economies, if the financial and banking system had worked for everybody in the way that it should, we probably wouldn't have cryptocurrencies. So to understand those origins, I think is really important to see in parallel what the central bank and what the government is doing, what they continue to do, how they continue to abuse the system they've built. And that then gives you some perspective as to why cryptocurrency and Bitcoin and all the others that are involved, certain ones, are so important.
A very concise answer. I think that is a great explainer as to why folks should read the Satoshi white paper. It's free for everybody. Just give it a Google. But of course, if you do want something that is much more digestible and is taking a look at crypto from a beginner's perspective without much of the jargon, I do recommend that you take a click of the link in the description of this video for the New Money, New Rules presentation by Sam here, where you'll learn a lot more about his approach in general, some of Sam's lessons that he's learned in the past, and some of the new exciting things on the horizon for crypto. So do give a click to that link. It does have a lot of interesting resources, not to mention, of course, the interview with Nigel Farage, which is very interesting to see Nigel getting into crypto in this stage of his public life, as it were. Now, one last thing here, folks, before we close for the day. As I said, there will be 2 episodes of Southbank Live this week. So on Thursday, we shall be having a conversation with David Murrin, who I recently had an interview with. If you haven't seen it yet, it is on the Southbank channel. Just click the Southbank Investment Research page. Go onto our YouTube channel, and on the uploads there, you'll find my most recent one. So that was our second interview that we've done with David. Very long indeed. We ended up going for 1 hour 40 minutes, and this will be a follow-up episode. So if you have any questions for him following that, you'll be able to ask him live on Thursday at 7 p.m. Sam, any closing comments here for today's show? We're on episode 40 here.
No, again, just to reinforce that point, for people that maybe are still skeptical, aren't really sure about what this space is about and where it's heading, I do encourage you to click on that link and check out the interview that I've done. We tackle that. We talk about some of the steps, 4 key important steps that people should be doing and taking on board to really get started in this market. And like I say, just don't rush into things. Take your time, understand, get the right information, and then start to move into what's really a very, very fun and exciting world to operate in.
Well, there you have it, folks. Sam Volkering here on Southbank Live, episode 40. I hope you enjoyed that. Thanks to everybody who did tune in the chat. This is a very lively chat, which is always great to see. Lots of good questions, lots of good comments. From what I could count, 3 people had read Satoshi's white paper, but the majority had not. So if you haven't read it yet, do give it a look. It is very enlightening, and it is a big flash from the past, from back in the late 2000s, which does now seem like so long ago. That's all from us for now. I hope you're having a good evening, and we'll see you on Thursday at 7 p.m. Bye-bye.